This is our Forex blog for March 2nd, 2012. And like we do most days, we want to buy the strongest ones versus the weak and sell the weakest versus the strong. We compare each currency to every other one using multiple time frames and multiple tools. The real-time one is a histogram on top. This is made up of 5 of our best statistical tools we've come up with over the last 6 years. 3 of them measure the direction, in this case the dollar, maybe 80-90% of the dollar pairs are going up, and 2 of the 5 measure the intensity of the direction. One's a bar-by-bar statistical intensity, and the other one's a more intermediate 30 to 45 minute trend strength compared to the last 20 days average level. So anytime this is at and above the 80 level, it's extremely strong. And patterns that you want to look for is extreme strength for anywhere from an hour to 2 hours like this, and then during the pullback phase, 1/2 or less weakness. And then underneath that we have the daily, weekly, monthly trend. So this one has a lot of strength, but the daily, weekly, monthly trend are down, so you don't necessarily know that this trend is going to continue. It does start to get very strong, one of the strongest daily trends up here at 2. However, the weekly and monthly trends, still down. So you can continue to trade it on the long side. Just realize that, because the daily trend's up, the weekly trend and monthly trend are down, you don't know how long it's likely to continue. Trends like the CAD that shows strength, where the daily, weekly, monthly is all up, tend to be more apt to carry their strength all day, like you can see here. Same thing with the Australian. Look at the Swiss, weak on all time frames. It tends to be consistently weak all day, and so is the euro. So just realize that's why we have all these tools. That's not to overcomplicate trading, it's just to increase your odds. So, clearly the yen is the weakest between these two, and you'd want to sell the yen versus some of the strongest pairs. The yen's always on the bottom, so you'd want to be buying the pound yen, buying the CAD yen, and buying the Australian yen. Let's take a look at that. Pound yen, starting the day off. This one's already, unfortunately, at the upper containment bands. This tends to be where price kind of stalls and reverses. It tends to be a very high probability reversal area. So because of that, you may not actually want to take this trade. When you see a currency that's strong, you get a nice pullback where it has plenty of room to go to the upper containment bands, you tend to have a much higher probability trade. So I'm going to skip that one for that reason. If you watch our classes, you'll see that in action. Let me go back to this blog video here. Okay, actually it was last night that, I'm sorry, I visually saw this and thought it was today. It actually was last night, and up around 3 is when the yen regains its strength. So what we should do is look at those other pairs versus the euro that was consistently weak all day. Sorry about that. We'll be looking to sell the euro pound. Notice, it falls pretty much the entire day until about 6 o'clock here, where the pound gets weak, and you can see it made a move up here. But nice, strong, consistent move down. Euro, Australian, same thing, down about 80 pips from there. And there's a lot of good trades. Once you see a trend really start going lower, making a lower low, it's a pretty high probability trade to sell this low here, sell this low here, short this pullback trade right here, and of course here. As long as it's making lower lows and lower highs, which this is doing, you're in a clear downtrend. Once it finally breaks this high here and this high here, it's more likely to reverse and continue up, which you can see it did. Also after 9 o'clock, we'll scroll into the future here. Actually, around 12, the euro started to get strong, and the Australian, which was strong for the most of the day, really after about 8 here, there's no more signs of strength, intense strength. Let's look at the CAD. The weak euro, strong CAD. You're going to get a nice drop in this as well. Just down, 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 down. Almost a 100 pip drop. And again, some of the entries sometimes you miss the beginning trades. You might have sold this low here. It had a little mini double bottom. When it finally broke through, it's very likely to continue. This right here is a trade I'd take. I'm just going to quickly mark up the trades I'd take. I like minimum 15 pip pullbacks. This one pulled back up about 18 pips, and you can see it continued. You always want to draw your fibs on the last swing, and most of the time the first or second fib target's the end of the move. So I would have got out of this trade if I had sold it here at 88. I would have got out at 48 for a nice 40 pip win, and I probably wouldn't have sold any more down there. Let's add the containment bands to this real quick, just so we can see where the likely max level is. Yeah, so it's already under the 2.0 containment band, so another reason to get out of that trade there. And if you are going to take a trade on this little pullback right here, oops, let me redraw that. Because it's really close to that containment band, you could definitely consider taking that trade, but it's more apt to reverse at the 1.382 fib target versus the 1.618 when it's that far down there. So you can see if you sold this here at 55, you're out around 30 here for another 25 pip win. The New Zealand got extremely weak here at 12, and the daily trend's down, the weekly trend's down. I pretty much focus on the weekly trend. I don't care about the monthly trend. I might trade more lots if all time frames line up, but mainly I'm looking for the real-time trend to show incredible weakness. The dollar was very strong at that point, so you could look for New Zealand dollar trades. And you can see this one's right near its low. It's not outside the containment bands. Breaks down underneath this low right here. You want to draw your fibs on that last wave. And it pretty much came down to these fib targets. Got a little bit underneath there. Hit the monthly pivot level. And anywhere in between the first and second fib target, if it stalls, it's underneath the containment band, just get out of your trade. For this trade right here, you've been short around 20. And you're out somewhere in here. We'll round up and say you get out at 95. So you made 25 pips on that trade. Let's look at one more example. You can see that the yen did go strong later in the day, but the daily trend wasn't up. The dollars was. So you'd be better off looking to sell the euro versus the dollar as well. It's a higher odds trade than the euro-yen. Now here's a Fibonacci area that I spend 30 or 40 minutes each night drawing, and it acts as support. Once it breaks that, it's very likely to go to the next area down here, which is about 30 pips away. You risk 10 pips to make 30 pips, and in that case it did. And you can definitely sell the low here, but again, most of the time price does not go underneath the lower band and continue. Sometimes it'll go down, sideways, but it usually doesn't explode down. And so if you sold this low right here around 32, 35, you want to draw your fibs on this last wave, and most of the time it's going to stall here. I would have got out of the trade somewhere in here and I wouldn't have taken that last trade down. But you can see extreme weakness here. Anytime you have extreme weakness on down moves followed by almost no strength on up moves, that trend's very likely to continue. And you can see here at 3 o'clock all the time frame trends, well, except for the monthly. The real time, daily, and weekly were all down. Again, I don't care what the monthly is. If it was super, super dark green strong, I might be a little hesitant to sell the lows. But this was an extremely weak currency today.